Hi, Dan. Here's this week's question. When would you use options to help protect your portfolio from downside risk?
Yeah, Constantine, this is a great one. It's probably a question you get a lot, I get a lot, but I also think about it how I think about my own portfolio here. And what I don't want to do is routinely buy puts or put spreads against my stock portfolio. It will be a big drag on earnings if you do that all the time here. So you want to be tactical, right? So you want to do it when you feel good about your portfolio, but you might be uncertain about a lot of other things going on. And especially if the market is really doing well and you're saying to yourself, I don't get why it's doing well. And I know a lot of people feel that way right now. When you look at the major indices, the S&P 500 is down, 5% or something from its recent highs. And you look around and you say, wow, there's a lot of fears out there. Fed's raising interest rates. We have a war in Europe. China has shut down a huge city. So these are times when I think you want to be tactical about hedging your portfolio when you're trying to keep intact the gains that you have, but you don't want to do it too frequently because, again, it will be a drag on your performance on a routine basis.
Thanks, Dan. Thanks, everybody, for tuning in. And don't forget to watch In the Money every week for Dan's fresh option trade ideas. Till next time.